There are lots of ways to invest your money. You can invest in 401ks and stock market, but real estate is also a great area to invest and a good place to put your money with a solid, historic, long-term appreciation with your investments. So I'm sitting here today with Cindy Mack of State Bank of Cross Plains, and we're going to talk a little bit about some things that you should consider if you are looking to put your money into investment properties. Thank you for joining us. I appreciate you coming in today.
Thanks for having me.
We had a really timely thing. I was looking at a number of things. Number one, my wife and I just closed on a cabin last month up in Minocqua. So we just bought a vacation home, and we're doing some other videos this month on investment and investment properties for people looking to get started. When I heard from you about some changes coming with people financing second homes. So do you want to share a little bit about what's going on with some of those changes or some considerations people would want to take if they're looking to finance either a vacation home or a rental property?
Sure. So in regards to the changes, those are relating to conventional mortgages. So the mortgage that you would be getting like from Freddie Mac or Fannie Mae, typically that's your 30-year fixed or 15, 20-year fixed rate loans. And what Freddie and Fannie have come out with is they have price adjustments. They've always had price adjustments on all products, but they've been pretty small. And second homes have always been priced pretty comparable to primary residences. But now they've changed those price adjustments to where with second homes, they've really bumped them up. And they've actually bumped them up to the levels of comparable to an investment property. So pricing on a 30-year fixed for a second home is either the interest rate's going to be quite a bit higher than what you're seeing pricing for your primary residence, or the fees are going to be a lot higher.
So what I'm hearing is somebody who's looking at possibly purchasing an investment property like a vacation home, a second home, or a home for a rental to use as a rental property, that in the next month or two is going to be much different than 6 months from now in terms of what they're going to be paying on a monthly basis. Is that accurate?
Correct. Yeah, the change goes into effect April 1st. So if you're closing on a property prior to April 1st, these things don't apply. It's anything that's coming up after April 1st. April's going to come pretty fast.
It will. It will come very fast.
Hopefully.
I was just talking to my kids this morning. I'm like, it feels like March outside. It's great. So saw some birds flying around and all that stuff. Mm-hmm. So if somebody's considering this process, like if somebody's thinking about, gosh, I'd really love to buy, a vacation property somewhere, or a condo where my child goes to college so I can visit more easily, or a property to rent out. If somebody came to you and said, that's what I'm looking to do, what types of things would you encourage them to be aware of or look at when trying to get that loan, which might be different than financing a regular home?
What I would encourage them to look at would be, how much they're willing to use as a down payment. Second homes, you don't have to have 20% down. You can get in with 10%. You'd have mortgage insurance, mm-hmm. but you don't have to have as big of a down payment as you would if you were buying, say, a 2-unit. That being said, with these new price adjustments, you're going to get hit with bigger fees with less of a down payment. So if you've got 25% down, that's going to be better than, even just 20% down. So down payment would be one thing we would be talking about, the benefits of having a bigger down payment. And then where's the money coming from? A lot of times what we see with second homes or investment properties, people use their primary residence to help fund the down payment. So, and with rates the way they are right now, I would say, we may want to, if we need to do a refinance to pull cash out from your primary residence for the down payment, let's get that going right away. And then you've got the money already set to go. Don't wait till you find the property. Let's get it now.
Is that more likely a cash out refinance or a home equity?
It could be either one.
Okay.
Either one. It depends on how much equity you have. If you've got a lot of equity, and what I'm talking with people now with second homes especially is if, oftentimes people don't have much of a mortgage on their primary residence, or maybe they've paid off their primary residence, and that's why now they feel like, oh, we can afford a second home. So maybe it's better to use your primary residence as the collateral rather than finance the second home. So there again too, I would encourage you to, let's do a cash out refinance, because you might be able to pull enough money out to just be a cash buyer then on the second home. And
especially with appreciation rates the way that they've been
right,
recently, right?
Right. We've been seeing, over the last couple of years, as you know, prices of homes have really shot up. So you may not even realize how much equity you have in your house right now.
When somebody's looking and they're like, well, there's no way I could possibly own two houses, right? Like, I mean, that's in so many people's heads. There's, whether it's, I can't buy a house until I sell my house, because there's just no way that we could possibly own two houses. I think a lot of people really have that mindset. What are the things that the bank's going to go through and look at to determine your ability to purchase more than one property? What types of things do we need to take into consideration? Is it just credit score? Is it just amount down? I mean, what are the big factors so that, some people might be able to say, oh, you know what, I'm actually might qualify. I might be able to do this, instead of selling themselves short.
Yeah, I hear that a lot. What I think most people are surprised with is how much they qualify for. Mm-hmm. So if, we look at people's gross monthly income, not your take-home pay. So we don't look at, we look at everything before taxes or any deductions come out. So that's the number we're looking at for your income. And we can pretty much, if, credit scores and down payment do come into play, but assuming everything's good, you've got good credit, a decent down payment, we can probably lend up to 45% of your gross income, which usually is a lot more than what anybody thinks that they can afford. And again, with rates as low as they are too, it could be a matter of let's restructure something that you already have, to help make the numbers to in your comfort level too.
So how would that work, like a restructuring of something?
Well, for example, we maybe have somebody that's on a 15-year amortization mortgage right now, and they don't owe much on their house. And so that's where if they need to pull money out to get the down payment, we could put them in a new 15-year fixed so that they get the money that they need, and maybe their payment is very close or even less than what they had been paying before.
Sure.
If your motivation is to invest in other properties, then often you may come to the realization that you don't need to pay everything off to be able to buy the next property, that you can make it all work and not stretch yourself too thin.
You had touched on rates a little bit, with rates being so low and rates being great, which they are. But there's also been a lot of talk of rates this year. I feel like more so than other years. I think every year we kind of get this, rates are going to go up, rates are going to rise, rates are going to do X, Y, or Z. I feel like that's every year. But this year I feel like it's been a little bit stronger with that that conversation with rates. So I guess what's your feedback? What do you see general interest rates doing, not just with investments, but generally over the course of 2022?
I do see rates increasing a little bit, but when we're talking, rates are so low, and we're coming off of just historic low rates. So those were never gonna stay forever. I think we hit the bottom and we're inching our way up. Rates will probably hit sometime this year in the high 3s.
But we've been there recently over the last few years,
yep.
Even, right?
Mm-hmm.
When things were still flying off the shelf and there was high buyer demand and sellers were getting competitive offers, when we were up in the high 3s or even 4 in recent years, right?
Right.
Yeah.
Yep, exactly. I mean, before COVID, rates were, I would say, right around 4 probably, and there was low inventory back then too. Yeah. So, so houses were selling really, really fast and markets were tight. I feel like rates are increasing, but they're still really really low.
They are.
And and there is some speculation that they may hit 4%, but that might be the cap for a while. They rates never move in a straight line. There's always blips. So you never know. They could come back down. 3.5 might not. If it went up to 3.75, there could be a 3.5 in the future
right.
still yet too.
So we've talked a little bit about like a second home or a rental property. What about somebody who may be wanting to try to flip a house? What types of things should they be taking into consideration, or what options might be out there for those people?
So the bank's going to consider a flip, very much like they would any investment property. There's not just one way to finance it. So you maybe need to put some cash down to buy it, and then maybe use a home equity line of credit to do the improvements. Sometimes people put as little money down as they can and have cash to then finance the improvements. We see all sorts of different things with flips, and it's more of an individualized financing.
Sure.
It's not kind of like, there's no one size fits all,
right.
I guess.
If I said, hey, I want to get involved in investment properties some way, shape, or form, and I know I need to talk to a bank about that. Anything else that you haven't touched on that you think people should know?
I think on the investment side of things, the one area that a lot of people, kind of question and stuff is how we look at the income from the property. So most people, when they start getting into investment properties, start a little smaller. They maybe buy a single family home that they're going to rent out, or a 2-unit, just to kind of get their feet wet and see, what it's like. Say you're buying a 2-unit. What we would look at is, we look at what your income is, but we also look at the income on the property. We will give you credit for 75% of the gross rent. So that's what we're looking at from an income standpoint when we're qualifying somebody.
Yeah.
So if you're looking at a property that, for example, has $1,000 a month in rent, we'll give you credit for $750 on that property. We don't give you the full
Sure.
1,000, just because we know that there's going to be some maintenance and other expenses. And then once you've had that property, then we go off of the true income that you're getting.
So does that have to be an existing lease, or if the lease is expiring and it's not currently rented out, can that be factored in any way, shape, or form?
Yes. So if it's a property, where the owner didn't renew leases because they thought it might be easier to sell, or somebody was living in one half and renting out the other, so there wasn't a lease on the other half. What we do is we have the appraiser do a market rent analysis, and so the appraiser will say this is the fair market rent for this property, and then we use 75% of that number.
All right, so once again, I'm Jeff with Realty Executives Cooper Spransey. This is Cindy Mack at State Bank of Cross Plains. An excellent job discussing different ways that you can finance your investment property. I think one thing that I'd like everybody to take away is, if you're interested or you're curious but you're not sure if you can do it, just ask, right? Talk to us, talk to Cindy, see what your options are, because you might be able to do something that you don't really think is possible at this point. And so don't give up on the dream. Thanks for coming in, Cindy. I appreciate it.